What's up, YouTube? So I am back actually. Solid setup for me right here. So we have came back here to this new price leg that we made from low to high. Got back to equilibrium. Created this 15-minute bearish or bullish fair value gap, and we are currently above that 4-hour fair value gap. So what I'm looking for here is, so we have sell side of the curve. Let me find this. Oh, actually, did we just tap in? We actually did just tap in, so I am about to go long right here on NQ. Well, their stop going to be right here. 75 points. Add one more contract. So reasoning behind this setup is we have sell side of the curve here. We retrace back to equilibrium of the range. We put in highs. Put the magnet back on. Put in buys here, or sorry, lows. Swept those lows here. So this is our internal sell side. And then had a market structure shift with displacement back into the range, but we did not take the high on either ES or NQ, so there's no bearish SMT. So, and then also what we're going to do is we're going to draw in our standard deviation for the manipulation move to see where we can target. So we're going to draw out so this is a standard deviation. We are going to draw out this box here, and we are going to set limits one sell limit here at the high, and then we're going to put one sell limit at consequent encroachment of this. Whoops, that is the wrong one. One limit here. So that would be our runner. Once we get to this high, we'll get to break even. But notice the -1 where it is. So as soon as price gets to this -1, I'm going to move to break even on this trade. But stop is below right here. So we'll just put that in as well. 2. It's looking good so far right now. I was setting up the stream, so I didn't even set my limit because I wanted to make sure I got this on recording. But we have our sell stops. Okay. So, like I said in the beginning of the video, the market's fractal. Every every time frame I could show you, we will have a setup like this. So what we did after we swept those highs or swept those lows is we market structure shifted with displacement back into the range, not taking this high. Because if we would have taken this high already, I would not have entered this trade because the objective would have already been met, or at least the objective that I am confident that we're going to go to. And the ES also did not take this as well. So there's no bearish S&T that is in our way on this trade. So I will move to break even right here. First TP is going to be about 18 points, nothing crazy. We did just make this new fair value gap, and this is what you like to see, is when price will make new fair value gaps out of, you know, old ones that they just revisited. So I will look, if we don't take this high, I will look to scale right here and add an extra contract. So I'm going to set the sell limit, but I think we are just going to get tapped, or sorry, the buy limit. I don't know why my terminology is off right now, and I hope I've been speaking into the mic this whole time. LOL. But so that is the context of this trade. Just wanted to make sure I caught it live for you guys. So we have that's so ugly, sell side of the curve, and we are starting to push. Stop has now been moved to break even. But this was a great trade. I'm taking this off because now this objective has been hit. That is where I'm confident the market would go. So then now I'm just looking for price to come up here and tap us. But actually, F that. LOL. Alright, so great first trade so far. Because we did hit the -1. I don't want to be greedy, looking for more ticks. I am confident we go here, but I just, don't want to be greedy. And there we go, though. So now that has been hit. And then now we just have that runner. We have our stop at break even. So far, if I would have gotten in down here like I wanted to, because where I'm supposed to be in is, I'll draw this out for you guys, right here on this fair value gap, which, like I was stressing in the beginning of the video, oh, whoops, wrong price leg. What I was stressing in the beginning of the video, equilibrium. It's such a powerful tool. And we are making new fair value ups. We could possibly run, but we are, real close to these all-time highs. We're around there. So you never know what's going to happen. You make sure you secure some money. So looks like we made 323 locked in so far. And then floating, we're at $618. And then I believe from, where did we get in? 63 3/4, 63.75. Sometimes I say it like that for some reason. So 63.75 and consequent encroachment 41. So that's like 20 times 41.50. Somewhere around $900 will be the runner. Let's make it 36. We'll just take it at the 2 if our runner ends up going up there. Well, actually, and this is why I wanted to live trade this, so you guys can see like where I'm looking. Oh, we are up here for our next target. Let me look on the smaller time frame, see if there's like any buy side. We do technically have this right here. So just the higher low on the 15. And when I go to the lower time frames, you'll be able to see. Sorry. So we have right here. And if it does line up, then I will put it back. Yep, lines up in that box. So actually, I'm going to keep it at consequent encroachment. Like I said, I'm just not going to get greedy with, oh, I moved the wrong thing. Just not going to get greedy with the ticks. Like this is 41.50 and then this is 46. So extra 3.5 points. And that's if we run up there, while we're still in this trade. But this was supposed to be my entry, was the fair value gap, but I didn't end up getting in. But I just knew that, after doing the math, that just want to make sure my risk management was correct, basically. Because regardless of how confident I am in the trade, look at that. Regardless of how confident I am in the trade, I still risk the same amount. I try to risk around on the 150K top steps, around like 500 to 600 a trade. But yeah, now we just sit like there's nothing else left to do. Look how we respected. Look at what we did when we came back to this fair value gap. Revisited and then pushed, and that's what we love. So if we came back here, I definitely would have scaled another contract to get up to 3 contracts, and then mitigated my risk by moving my stop loss. But this was a solid trade, most definitely. But we had to wait and just be patient. Didn't force any trades. Waited for the model to present itself. So I'm gonna delete this. And then you guys can go back and rewatch this video. And I'll try to make sure I have everything annotated so you know what these boxes are. So we have this 15-minute bearish or bullish fair value gap. We tapped it right here. Ended up doing Also, it looks like a form of accumulation, manipulation, and distribution. So that is another ICT concept as well. So we have the accumulation right here. And then we have the manipulation here. Let's put that like to the side, inside. Let's do bottom. Bottom. Yep, see? Accumulation, manipulation, and then the distribution after that. So what we did is we formed a support and, ICT concepts. This support with all these stacked lows, people will feel like, oh, okay, price is holding this area, we'll definitely be able to shoot up. But what banks do is they can't put in their entire position just like we can. Like the same way that I just entered those positions, banks can't do that because their positions are too large, so they need pause. So they need orders going against their positions because this is a zero-sum market. If I'm winning, somebody's losing. So people that went long here put their stop losses right here, and then they got taken out. Oh, man, that sucks. Manipulation. But what we do is we wait for that, and we wait for price to show us that it wants to go in that direction. We wait for a retrace, or if there's bullish SMT right here after the first displacement candle, I'm in the trade because I have a general idea of where price wants to go. So hopefully, so we made this new price leg. This is equilibrium right here. Not going to chase the trade or look to add positions, but we should, if we are going to go up here to buy side, our stop loss should be safe. We shouldn't get taken out at break even. But now this is no risk on this trade at all. Oh, and then let me mark this distribution. Oh, and I'll put that back at the top. Oh, okay, top. I don't know. You guys know what I mean. That's not what I wanted to delete. And then now we just sit on our hands and watch it play out. But it's looking like a really good trade. Look, another fair value gap. So that's what I meant when I said earlier that if we are going somewhere, the fair value gaps in that direction are supposed to be respected. So the amount of fair, so right there we had this bearish fair value gap become disrespected because we're not going lower anymore. We have this bullish fair value gap being respected. It's also at equilibrium. And then once we left this fair value gap, we created this one that got revisited. We shot right out of it. And then this one, we kind of disrespected this a little bit, but I know that people hate like ICT traders hate like retail terms or like candlestick patterns like Morningstar and stuff like that. But this candlestick pattern, this is what I believe in every time. This is a fake out candlestick pattern. This too. One move down and one move right back up. Like this one never happened. So when you see something like that, you normally know you're getting liquidity. This is kind of the same concept. Maybe on the 2 minute it looks the same. Yeah, see? We swept it. One move down, one move right back up like it never happened. So that's one that I personally will not swear by because I'm trying not to do that anymore. But you guys know what I mean. Let's go to the higher time frame. So perfect entry. we might make a new fair value gap, and then if we don't get here yet and we make this new fair value gap off of this price leg, I will look to find a model that looks, if not identical, exactly like this. But it looks like we are in the right direction for sure. And even though I was confident we were going to get here, still take off your contracts. Make sure you pay yourself for being right. You can never get greedy. Once you get greedy, because a lot of times I've done it in the beginning of like when I started like knowing what I was doing, and the reason why I was losing, I was like, man, I was floating like 1,800 today, and then I didn't take any money off, and then I ended up making nothing. And I actually ended up losing on the day. So greed like kills. And if this doesn't work out, I still paid myself. I still made money, and on the journey to getting this funded. That CL trade wouldn't have worked out. Didn't take it because this looks nothing. Looks nothing like this. Sell side, buy side, precision. So, but we were right in the direction of CL, and all you just have to build the narrative of where you're expecting price to go, and find a model that allows you to execute that. I'm just looking to see if there's anything. CL is headed to this buy side level here. If it displaces through, we continue. If it doesn't, then we look to target equilibrium. But you have to wait for the reaction. You can't just assume. This is a really higher time frame level. Is it a daily? It's a daily level. Is it a weekly? It's a weekly level. I don't know if we'll get to a month. It's a monthly level. Okay, 1 minute market structure shift is a low probability trade to take at this level. It's a weekly level. You need multiple daily candles to show you where price is going to want to go from there. Anything before that, you're jumping the gun. You don't need to be first to the party. You just got to make sure that you're there before everyone, is having fun without you. So I'm expecting it here. Let's look on Tradeovate. Hopefully you guys can't get my information from this. I just want to see if there's a 30-second fair value gap that I could have taken where I was expecting the reversal. Okay. So see here from the start. So we had those stacked equal lows, and we had this fair value gap disrespected. Market structure shift would have been right here or right here, depending on the type of trader you are. If we had SMT, so if like ES had not taken this low yet, and it was like all the way up here, I would have taken this fair value gap, and we would have been moving a lot. And then I would have looked to take the regular entry that I would have taken. So I would have taken an entry at 950.75. Yeah, with my stop right here. Where's 950? Is that, yeah. So 950.75. Stop here. Just better risk, 1 to 3.5. But there's no SMT because, as you guys can see, we took that low here, and we took that low on ES as well. Oops. Oh. What time is it? 12:35. Time we get in 12:15. So we've only made one 15-minute candle. Yeah. Still forming this one. 9 minutes left on this one. So if we revisit here, because a lot of times like price can just tap and then go and not give you the model, and then if that doesn't happen, then we don't execute. If we inverse this, I will look to add one more contract. And inverse means if we close above. If we tap it, or if we close above like enough, I'll add another one. But look, fair value gap, internal. People move their stops right here. Higher high, higher low, higher high. People move their stops. That's money. Let's see if we close above here. 20 seconds left. See, we didn't even touch 18,000. Those round numbers, like those round psychological numbers, they matter. Oh, I hate when price does this, closes on it. I'm not chasing. If we close again, like a small candle, I'll add back. Like, I know that we opened right here. I just gotta make sure, like, I want it to count, you know? Because I don't want to add for no reason. If it closes closely in here, though. Well, there you have that. As soon as we close, I'll set the limit. Oh. Or I might just buy.
Order filled.
Now I just added my position, so I'm back in 2 contracts. Stop still at break even. Relative equal highs right here. Let's see. But notice what I mean. When price is going in your direction, bullish fair value gaps will hold, bearish fair value gaps will fail. So here's the next one. So if the model is correct and we're supposed to go here to buy side, then this will fail as well. It might come back, retap this as inverse. And I don't want to get too greedy, you know, adding contracts, but like this would be the inverse tap. Because now my stop is, you know, right here as opposed to right here. But we already manipulated, and then we made fair value gaps. So as much as this, we have this inverse, and we made this one. Now, really, I would like my stop to be below the candle that made it, but, you know, whatever happens, happens. I'm still confident that we're going to be headed here. And if we're not, we made money, we're still risk-free. And there we have that. Respected consequent encroachment of that inverse. Solid. Now we're respect. It's like this one is someone holding, but also the inverse held. So when you're confident and you've built a conviction in the narrative, then it doesn't matter what happens. You should still be able to hold this trade. And if they get taken out, are you losing money? No. If you get taken out up here, are you making money? Yes. The number one job is capital preservation. Wait for the setup to come to you and call out to you, and then you execute. Remember, my entry was supposed to be right here. And even though we didn't make a new fair value gap, let me clear this off so you guys can see. Notice this came all the way back down here. No fair value gap, but still am able to execute on the 1 minute chart, recognizing where manipulation is happening, understanding what's being respected and what's being disrespected. Relative equal highs, great draw for liquidity. So now we just wait for it. And if price came all the way back down from here, yeah, you get pissed. But you know what I'm saying?
Order filled.
That's great. Stop got moved up, move this to 1. Still break even trade. And we're just gonna move this to 18,000. If we start to struggle after we get here and we don't displace through these highs, then we come back down. What have we done? We've created liquidity. So I still see this coming. Honestly, it could come all the way up here, but I'm not holding that long. But that could be the start. That what I was saying is if price fails to displace through and then starts to, make sell side, we will retrace back to equilibrium of this move. And it will be just the same move that I took on a larger time frame. So you have sell side of the curve, buy side of the curve, until external is taken.
Order filled.
Oh, that get taken out? There you have that. Delete that. Great day in the markets. Up 1,200 on the day. 1202. Solid. Hope you guys learned something. And